Welcome to the Stockscores market analysis for September 13th, 2010. In this video, as I do each week, I try to provide an outlook for the week ahead for traders and investors. Let's get started with the equity markets. I'm going to begin by looking at the DIA ETF. This is the Dow 30 Exchange Traded Fund. I am on tradescores.com, which is a website presented by stockscores.com. And here you can see that we've had a pretty good run over the last 7 or 8 days, and we are now nearing resistance. The Dow is actually underneath resistance, and so it has some upside potential until it hits that resistance point. Although an argument could be made that this chart is building a head and shoulders top, and I've tried to draw out that pattern for you there. So I'm sort of mixed on this one. I hate to chase markets higher. This one's been going up for a while, and I fear that it may soon be reversal time for the Dow. Let's move along to the S&P 500. I've got that on screen here now. The S&P 500 has also had a pretty good rally, as you would expect, given the strength in the Dow. But unlike the Dow, it is now at resistance. You can see that we have rallied right up to that ceiling, and that tells me that the larger index, the S&P 500, which is a bigger representation of stocks, is very close to a reversal point where it at least will get stuck, if not reverse and head lower. So I would be cautious given what we see in the S&P 500. The next chart I want to look at is the Nasdaq 100, which is QQQ, and we have that right here. Now the Nasdaq has broken through a line of resistance, so we've got a real interesting situation going on here because the Dow is under resistance, the S&P is at resistance, and Nasdaq has broken its resistance line. Now it may be that the Nasdaq will get stuck right up in there, and so if you sort of follow along with that and what we see in the Dow, we may see one more up day for the market before some selling pressure comes out. But either way, I think we are very near a reversal point for U.S. stocks given what is going on in the U.S. indexes. One thing that's helpful when we're looking at U.S. stocks is to also look at the U.S. bond market. The U.S. bond market has been a place where investors have put money as a safe haven or a place to get some return given the uncertainty in U.S. stocks. Now, when I take a look at the U.S. bond market, and this is the Treasury bond, the 20-year Treasury bond ETF, symbol TLT, I see a market that has run away from resistance and is now run away from its trend line and is now pulled back to it. And today, the bond market had a little bit of a bounce off of that upward trend line. Now that makes me think that the U.S. bond market is probably more likely to move up in the next little while, and that would contribute to some selling pressure in U.S. stocks. And so what we're seeing here is a somewhat bearish signal for U.S. stocks given the money flowing back into the U.S. bond market. Now let's keep with with the stock market indexes and jump over to the Canadian index now. This is the T.XIU index fund, and here we can see a little break from a flag pattern. A little bit hard to see on this time frame. Let me try that again. There we go. So there's our little flag, and today we broke to the upside from that, largely because of strength in oil and strength in the Canadian dollar, rallying up towards resistance. I think upside is relatively limited in Canada, however the optimism is there, and that break to the upside probably will lead to a little bit more upside in Canadian stocks, driven of course by the strength in commodities. Alright, let's jump to some of the currencies, starting off with the US dollar index, and here we have that chart. This is UUP, which is a US dollar index fund, and we recently broke the downward trend line. You can see that happened there, and we've been consolidating in here, and today we broke to the downside from that. That tells me the US dollar is probably more likely to head lower than higher. I don't know if that's good or bad for US stocks. Typically we see the US dollar, when it falls off, favor US stocks because of course US stocks get weak. We have to wonder, why is the US dollar selling off? It would seem to me that maybe because the global economy is improving and the U.S. economy is lagging, and that would hurt a lot of those companies that deal mostly in North America. Now, some of the stocks listed in the U.S. stock market, of course, are global in nature, and they may not get hurt as much, but something to think about there. A little bit of a confusing picture because the U.S. dollar usually follows along with the U.S. bond market, and here it is not. Let's take a look at the Canadian dollar, because I think there you start to see some reason why that US dollar is falling. And here's the chart of that. Of course, the Canadian dollar rallied quite nicely today, and that is, I think, because commodity prices are rising. Why are commodity prices rising? Because there is strength in China, and China will contribute some growth globally at the expense, perhaps, while the U.S. economy is lagging. And so we see some strength in commodities, we see weakness in the US dollar. That tells me that the picture globally is improving, particularly in emerging markets and China, but not so much in the US. Here is a chart of the the emerging markets index fund. Had a great day today to the upside because of some news overseas with China growing fairly well. But again, you have to be a little bit worried when you see a market rally that much. I think we can see some more upside before we hit resistance there, but my expectation is that upside is relatively limited on the emerging markets as well. Alright, so how does this all fit together? Well, I think that in the short term, it is very likely that the US markets will top out. Now, the global markets, the emerging markets, and China may lag that. They may not top out for a few more days, and the Nasdaq may be able to sort of lead the U.S. markets higher, even though most stocks in the U.S. are moving lower. But I would be very cautious here, given that the major indexes in the U.S. are rallying into resistance. The September gains are roughly 7%. That's a very significant gain for the month of September. And I think that there's just a great potential that we will get some profit taking. What is critical is that on Tuesday morning, the retail sales number gets announced at 5:30 a.m. Pacific time, 8:30 a.m. Eastern time, an hour before the market opens. And if that retail sales number lags what people expect, I think we will see some selling pressure on Tuesday morning, and that may firm up that resistance that we see in the U.S. market indexes. So watch for that. I am leaning more towards being short the U.S. stock market than being long right now. I think that profit taking is likely. You may not see it globally. You may not see it in Canada. You may not see it in emerging markets. But certainly in the U.S. there's a good chance of seeing some selling pressure this coming week. That has been the Stockscores market analysis presented on tradescores.com. For more information, we encourage you to visit us at www.stockscores.com or www.tradescores.com. Have a great week in the market and trade well.